Welcome back, all. Paul Meeks here with Tech Tune-Up. It's June 18, 2024. This show will be a little shorter but sweeter today, given the fact that we were together just a few days ago, last Friday. But there are some interesting things. Of course, I'm always brought to you by my good friends at Benzinga and my own investment firm right behind my shoulder, Harvest Portfolio Management. Down here where I choose to live in the Bayou in Charleston, South Carolina. As always, I'm going to refresh the critical news on some stocks since the last we met. I have an interesting spin on some news that has just been reported, contrarian spin. Then I will, as I always do, show you my Meeks tech buy list, and then we'll finish on some of the key tech trends. So let's get at the first bit. Apple, of course, always in the news. This is kind of interesting. It's a twofer today with Apple. This is very significant. An investigation has been opened in Europe as a potential violation by Apple of the Digital Markets Act, which has only been enforced there for a few months. And here's why it's a big deal. The rules say if you are found guilty of the Digital Markets Act rules, you have to pay 10% of your global revenue as a fine. You know what that number would be? Analysts expect Apple to do $360 billion of sales this year. So the fine would be $36 billion. Of course, there's always a negotiation and never will be that high. It'll be something less, but this is very interesting. Stay tuned because the EU is also after Meta and Alphabet and even TikTok because they dominate social media. The other thing in Apple news is after a lot of hubbub, a lot of hype, a lot of excitement, at least initially, Apple is shutting down its buy now, pay later. And this is interesting because we've seen this with other companies. A few years ago, the AI of that time was fintech. Remember, there were even fintech analysts, and we were going to have this wonderful blend. Everybody was going to make a ton of money on the blend of financial services and tech. Well, fast forward, maybe it's a feature, but it never really became a product, and it's ended up badly for everybody. And if Apple can't make it work with its great resources, who can? So be wary of the trend du jour, because sometimes a few years later, we look back and say, wow, that was bullshit. Or wow, that wasn't as profitable or fast growing as we thought. The next, this is also interesting. Nvidia, right? Apple's never been on the Meeks buy list. Nvidia has. We've made a mint on this stock, and I still think it's going up. But here is something that you should know. This week it has been reported that the State Street technology spider, so it essentially replicates the tech stocks that are in the S&P 500 for passive investors who don't want to actively pick stocks. They are going to do a rebalance, and that is going to be reflected in the market in a few trading days. And what happens is, because of Apple's poor performance and Nvidia's great performance, they are going to flip-flop their weights in the XLK, this technology sector ETF. But let's put this in perspective. From my calculations, the weight of Nvidia in the ETF will go from about 6% today to about 20% on the rebalance. So that's a swing of 14 percentage points. The total assets under management for this particular ETF is about $70 billion. So theoretically, there will be buying demand of about $10 billion for Nvidia on the switcheroo. But even though that sounds like a lot of dough, I don't know if it's going to move the needle that much because, first of all, it's already been announced, so it's already baked in the stock price. Second of all, $10 billion is about 20% of Nvidia's average daily volume. because it's a 3 trillion market cap stock. So we'll see what happens, but a lot of news outlets are really pounding on this, jumping on the Nvidia bandwagon, particularly if they've missed the run up on the stock so far, saying that this is a big and new catalyst. Not so much. If you stay here and you watch my buy list, you've owned Nvidia forever. And it's still on my buy list. Still think it's going up. Next, I've always poo-pooed on the EVs. Well, here's another one, Fisker, that has gone belly up. This is a very, very tough business. And even Tesla is meeting challenges. If you're into EVs, buy one. Don't invest in the stocks. And the same thing goes with all of these environmental, social, and governance investment metrics. Live your life that way. Work for a nonprofit. Do good. But don't invest in this space because they usually suck. And no surprise, even though it's a Mag 7 stock, I've always been off Tesla. The other thing that's interesting is I've taken a look at the pricing for used EVs. They are crashing. Here's a good example. I need a new car, and I never want to buy a new one because as an investment analyst, even though I can afford it, I never want to buy a new car because it depreciates more than any asset known to man. So I go into CarMax or Carvana, and I take a look at their inventory. And their inventory, at least at Carvana, is chock full of used Tesla Model 3s. They're giving them away like a bag of potato chips. That is a really bad sign because Tesla, particularly Elon Musk, originally said years ago that a Tesla would be a appreciating asset. No, dude, it's depreciating even more than internal combustion engine cars. Real bad sign, in addition to the Fisker bankruptcy for the EV space. Next, OpenAI, right? OpenAI started this whole ball game when it introduced ChatGPT back in November of 22. We know that OpenAI is also supported with a 49% stake by Microsoft, which means that among the major tech companies, Microsoft is always going to have the pole position. But I'm looking for use cases because I'm absolutely convinced that the infrastructure builders, which so far are the semiconductor and hardware companies that have all been up and down Meeks' tech buy list, will continue to do well. I'm not sure that these software apps in the end will be that big of a deal. I'm really worried about that. So I'm looking for use cases to prove to me that AI products, of course, they won't really be full strength for a year or two, will actually move the needle, not for the guys that provided the picks and shovels to build the AI infrastructure, but the follow-on. So this is kind of interesting. And I do think that this might be a legit use case. So OpenAI has done a deal with Color Health Cancer for a co-pilot product to obviously do cancer screening. I hope, for the sake of humanity, that works. That would be great for everybody, and it also would be a wonderful use case to show me that AI is not just a feature on your phone or your laptop or your desktop, but it actually has a big target market. It's a product, not just a feature. Next, a couple of weeks ago, home run. We put Broadcom on the Meeks buy list. Fantastic. It's been a great call. Right now, it's probably even supplanted Nvidia as the hottest AI stock. So I'm really happy about it. And I encourage you, because I get a lot of questions, Paul, this thing is like exploded. Do I at least trim it? I say not yet. I think there's more upside here with Broadcom, ticker AVGO. This is kind of interesting in the news. Autodesk, ticker symbol ADSK. This is a legacy software company that has roots back to the 1980s. What they do specifically is software for design, quite often used by architects. But they had a financial accounting scandal. And whenever you see that, run for the hills. Companies are always trying to juice their revenues higher than they really are, or lower their expenses lower than they really are to boost their earnings, because they know Wall Street's watching. So these guys got snagged, big pie on their face. And because of the mismanagement and the stock has done so poorly, they have been threatened by an activist investor. We'll see what happens. Now, just the announcement of the activist investor play popped the stock. But I would tell you, do not get tempted to buy this or chase this name. This is an old school software company that could just as easily be disintermediated by AI as benefit from. Actually, I think the odds are that AI is going to screw them, not help them. And who else is in this camp? Salesforce.com, Oracle, Workday, ServiceNow, all these what we call enterprise resource planning software companies. Their model could be absolutely smoked by AI, and that ain't a good thing. I do like ServiceNow, ticker symbol NOW, as best in class in the ERP software space. It's always been the best run. Maybe they survive. I worry so much about the other ones. And then Oracle, because Oracle actually sells OCI. It's their Oracle computing infrastructure. They host data centers to do AI business, their own and others. Because they have that offering, that portion of their business will benefit by the advent of AI, but their core software business could be screwed. So be very careful. Don't get caught up in the hype with these legacy software companies. They're really cheap, and I want to buy the cheap one instead of the expensive one, Nvidia. Well, there's a reason they may not transition successfully to AI. We'll see what happens. But that's the story of Autodesk, which has problems of its own because of the financial accounting scandal. So think about that. Particularly wanted to go through the Nvidia story, share with you the math, because I think it's being misperceived in most business media. But now let's get to my tech buy list. You shouldn't expect much changes here, right? We got together just 3 or 4 trading days ago. CrowdStrike, Micron, my best pick. And the stock is doing very, very well. And this is going to be super important. And of course, I'll report on it in real time. But on June 26th, Micron is going to announce a quarter. And this stock is already up 73% year to date. It's been huge for you since I highlighted it as not just on my buy list, my top pick. 73% year to date, and the S&P 500 has only been up 15%. And that's actually a good year for the broader market. So stay tuned. When you go through my list, the only thing I'm a little bit wary about on my entire list is Qualcomm. Now, Qualcomm deserves to be on the list, but Qualcomm has done so well for us. The stock has shot up so far that I think it might be getting to the end of its run. It's well beyond now my separately calculated price target. So I move it to yellow, which means don't buy it fresh. Don't chase it. Let's see what happens. I'm going to have to come up with a thesis in which the revenue, the earnings, the cash flow are higher than I originally thought to propel the stock further. So I'm doing that homework. Stay tuned. Of course, everything else has been just smoking it on this list. Benzinga subscribers hugely benefit. I'm really pumped about it. But I will tell you that as you go through the list, it's consistent with my theme. It's very heavy on the AI infrastructure builders, which are primarily semiconductor companies like Nvidia, and server companies like SMCI and Dell. Dell's another good one. Remember, I reported Dell had a poor quarter, at least perceived to have a poor quarter a couple of weeks ago when they announced. The next day, the stock is down over 20%. I stuck with it. And the stock is coming roaring back now. roaring back. So anyway, we'll see what happens, but just wanted to take Qualcomm from the green position to the weight yellow position. So next, let's finish up with some tech trends. We're going to put on our macro economist hats. We don't like doing it, but we have to do it because remember my 80-20 rule. 80% of the evaluation of tech and other aggressive growth stocks is interest rates. Because interest rates go down, valuations go up, and vice versa. 20% really is all this wonderful stuff we talk about, AI. So rates have come down a bit, right? We're now with the U.S. Treasury 10-year yield at 4.29%. We call that, at least in my finance class at the Citadel where I teach, America's risk-free rate, the baseline rate on which all other loan rates are built. And that got up to 5% last fall. Now it's down to 4.3. And of course, as the yields come down, and 70 basis points is quite a bit, stocks have continued to rally. Now, interestingly, today, just this morning, the Fed's announced that U.S. retail sales in May were more subdued than people thought. Why is that a good sign? Because the consumer is 70% of our economy, gross domestic product. And we actually want them to rein in spending because as they rein in spending, we get enough cooling of our economy and inflation to make the Fed, our central bank, more comfortable lowering rates. And dude, we need that. If it's not going to happen between now and December 31, we need it next year for sure. This is kind of interesting on a geopolitical note. Everybody knows that we've had this nastiness ever since Trump first came into office between the U.S. and China. But for a while, it was just limited between these two superpowers. And now the G7, the other industrial nations, are also on the back of China. Like in Europe, for example, any EV, electric vehicle that's manufactured in China, including Teslas, is now going to face a tariff of up to 40%. So that means the EV makers are going to have to raise their prices 40% to maintain profitability. Again, we've already seen lagging demand in electric vehicles. We'll see what happens with the uptake in the tariffs. But anyway, U.S. versus China, contained. Now it's busted loose, and we'll see what happens. Of course, there'll be even more anxiety about this as we get into the U.S. presidential election on November 5. Here is the greatest theme. I just want to make sure that you're bulletproof with it because it is super important. I know I talk about it all the time. Is artificial intelligence a feature or a product? If it's a feature, these AI stocks are already overvalued. If it's a product, something broader, something that's actually going to materially for the good change companies' financial results, then okay, maybe there's upside. I stick again to the infrastructure builders because they're seeing the benefit here and now. Now, we know the capital expenditure plan because they've been announced for the big tech companies. Amazon spending $60 billion this year on this stuff. Meta, Alphabet, Microsoft spending $40 billion each. And so, yeah, they're going to buy a lot of Nvidia chips. But take a look at this. Despite the wonderful AI announcement last week that really popped the stock for Apple, right? They made an AI announcement at their Worldwide Developers Conference.
Paul, you there?
Yeah. Well, what happened?
Your video turned off.
I don't know what the deal is. Got
We can still hear you.
Okay. Should I go ahead?
You can go
Yeah.
ahead.
All right, guys. Sorry for that. Looks like on my end, my internet connection is great, right? I'm a tech guy. I should have a great internet connection. But anyway, I'll just wrap up. This is a tell, everybody. Apple has this wonderful AI announcement at their software developers conference last week. They talk about the glory of how it's going to change the world. But here's this. We're a week later, and the Wall Street analysts that cover this company listened to that announcement just like we did, and they did not change their earnings estimate. So I don't think the stocks rally is legit. Same thing with Adobe. Adobe announced a quarter and said, oh boy, our AI business is cooking. After analysts heard that, and these are people that cover that stock for a living, they didn't move their estimates. So you can't have stocks go up unless earnings estimates go up. And so that tells me that at some point, these stocks got to be sold or maybe even shorted. So the last thing I want to talk about today is if you are a serious tech investor, I'm going to give you some homework. There is a very interesting book, which I've just read, or essay, or it's pretty long, but whatever you want to call it. But it is up here on the screen. It is written by Leopold, and then take a look at his name. It's got about 50 letters in it. Not even going to try to say it. But anyway, it's called Situational Awareness. It's about the advent of AI. And I always try to give you some great sources to study this sector. You got to put this on your summer reading list. Structural awareness. So anyway, guys, sorry about the loss of the video in the last 2 or 3 minutes there, but that is all we have for today. And I will see you next week with another edition of Tech Tune Up with Paul Meeks.